Okay, we've got a lot to get through, so let's make a start. I'm sure we'll have a few more joining us as we're going, but that's fine. So hello everyone, welcome. This is the second in our series of free webinars run by St Edward, what we're looking to do here is offer guidance and help and advice from industry experts on all things property to help people onto the ladder. And today we're looking to discuss how to buy and when to buy. So if you missed our first webinar, we have a look at Berkeley Group's YouTube channel, where we're now starting to host these events on there, so you can find the content there. Firstly, before we get started properly, we'll do some introductions. So my name's Lisa Flounders. I'll be moderating today, and I'm joined by a panel here of property experts. I'll work my way around the panel so everybody can say hello. Jason, do you want to start?
Yeah, good evening. Hi. Hello. So my name's Jason Blunden. I'm the MD of Evolve Financial Solutions, and we are new build mortgage specialists. So looking to help people get onto the ladder in the new build sector.
Okay, and Daniel?
Hi there, I'm Daniel Renshaw. I work for EJ Winter & Son Solicitors in Reading. We're a high street law firm based in the Reading town centre. Our firm generally deals with a wide range of different areas of law. I personally work on the new build team. I'm a senior conveyancer in there, and I've been on the new build team for what's fast approaching 10 years now. So hopefully I can offer bit of advice and a bit of insight into what the new build process holds from a legal point of view.
Great. And Danny?
Hi there, I'm Danny Rowland. I'm the Sales Director for Berkeley St Edward. I look after 5 active schemes for Berkeley St Edward and work with Jason and Daniel quite regularly.
Great, okay. So at our session in June for first time buyers, we had nearly 300 people join us, and it gave us a real idea of the sorts of questions and the topics that people find really helpful when they're looking to buy a home. So we're hoping to address some of those today in our second session. And one topic we expect people to also be particularly interested in today is the Chancellor's announcement last week about stamp duty changes and what that means for buying a home now. So we'll be touching on that as well later on. If you do have any questions during the session, please do make use of the Q&A button at the bottom of your screen. We'll do our best to get through as many of those as we can as we're going, but we've got a lot to get through, so we'll do our best to wrap up as many as we can at the end as well. Otherwise, the guys will be perfectly happy to take questions after the session too. So on that note, I think we should probably get started. So I think a lot of people find buying a home for the first time especially quite a daunting prospect. There's a lot of property jargon to wade through. There's a lot of technical process to think about. So maybe that, that's a good place to start. So one of the poll questions we asked you was how confident you feel about undertaking the mortgage application process. And this is quite a mixed bag of answers actually. So 18% of you said very, 18% said you feel okay, 41%, so the majority say not very confident at all, which is really interesting. So Jason, from your perspective, maybe you can kick off with telling us how to go about making that first step and how people, how can I know if I'm in the right position to apply for a mortgage?
Yeah, absolutely. I'm quite surprised by that, to be fair. 41% there suggesting they don't feel very comfortable with the situation right now. There's a huge amount of plus points for buying a property at the moment. Clearly, with the Bank of England base rate being there at 0.10%, interest rates, as in the Bank of England, has never been lower. Fixed rates, which most people tend to steer towards, they are again, mid 1% at the moment. Even a 5-year rate is well below 2%. So to borrow money, the actual cost of repaying the money they've borrowed is extremely cheap. I wonder whether people have been thinking about the press they've been reading about maybe in the past the surveyors not being able to get out to houses. And maybe from a self-employed point of view, they might have heard that it is a little bit trickier at the moment because of COVID and how they've perhaps been or not been earning through that period of time. The interesting fact about all of that is that each lender offers a different process. Each lender offers a different opportunity for someone to borrow money to buy a property. And that's where being independent, having a whole of market array to a new build specialist actually will help a lot of clients. There was at the peak before COVID well over 10,000 mortgage deals, probably if not 14,000 mortgage deals available in the marketplace. That went down to very few thousand during COVID, but is now approaching 7,000, 8,000 options available. Being a new build and being independent means that actually from a self-employed, for example, point of view, which lenders at the moment are struggling to allow a mortgage to go through or to qualify to have a mortgage, but others will allow such things. And certainly when you're comparing each person's income and looking at their criteria, we can often find a way forward for a lot more than just 18% of the people that are looking to buy. So I find that, hugely surprising.
Okay.
Jason, that's a really interesting point. Sorry, Lisa. In terms of customers, and I was one, when I first bought, I had a perception of what I could buy and what my affordability. And until you actually have that conversation and speak up with a financial advisor, you're never really going to know. So it's really important that everybody out there, no one in this industry is trying to trick people up or gain anything out of it. We're here to give you honest professional advice, and we're here to help you ultimately. So we were very stringent and highlighting that point in the last webinar, that don't be scared to sit down, have a conversation, be open and honest with the broker. And from there, we can give you a true assessment, or Jason can give you a true assessment of your affordability, how quickly you need to perform, what you need to do to perhaps get yourself into a better position as well to give you advice and guidance.
It is quite surprising, the variance in lenders at the moment and their criteria. And it's good that we are independent because the whole range is available. I've had cases over the last couple of weeks where NatWest haven't liked them. A big national bank like that, you think, actually, why don't they like it? They're looking more into detail about people's criteria and how they've been. Whereas I've replaced all of those deals directly with Halifax. At still at really good low rates of interest. They've looked at things differently to NatWest. They've looked at their model of what they can and can't allow from a risk perception, and they've agreed, all of them, that NatWest have perhaps in this situation not liked. Now, if someone was just walking down a high street and going into the bank that they're normally used to going to and get that answer, they might be put off from buying. They might think, actually, I've got no way forward at all. Without going to every single bank in the high street and saying, will you, won't you, it's difficult to ascertain. So I just wonder whether that is perception. If there's just having a conversation with one bank, that's the answer and that's the given rule, when actually there is so much more option out there.
Yeah, of course. I mean, the second question we asked actually was, is a mortgage broker compulsory? And again, really interesting. So we're almost half and half. 59% of people said no. 41% of people said yes, a broker is compulsory, which is accurate, Jason.
Yeah, I think, 59% therefore could potentially miss out on knowing what's available to them. And, if I had £1 for every time someone said to me, crikey, I didn't realise it was going to be that cheap, or actually I didn't realise I could do that. The best situation is when you sit down and have an open discussion with a client. They've got all their correct information there about their income, about their outgoings. From a self-employed point of view, they've got the relevant paperwork that the Inland Revenue produces for them, what's called the SA 302 from their accountant. And with that information, very, very quickly, with all the technology and software that we've got, we can look at options for people to buy. And I've had a conversation this afternoon with a gentleman that thought he couldn't buy, had various different loans and credit cards, had been turned down by a bank. And we looked at what was important to him. Is it the case that you've still got 5 different debts in different places, paying different amounts of money, that means you can't buy your house? Or actually, if we looked at your high street bank as where your current account is placed, which was nationwide in this situation, and looked to see whether they'd wrap all those debts up into one, would that make a difference? And all of a sudden, they realise that as a nationwide customer in this situation, paying just 2.9% on a personal loan over a longer period of time to wrap up their unsecured debts in one way to make it more affordable for them, actually made the house that they were looking for affordable to them, both from the Help to Buy point of view and from the mortgage point of view. So having an oversee and looking at all the options is by far the best way. And sometimes we go to a bank directly, they might not have the foresight to look at that. It just comes with experience in the new build world.
Can I just add as well, when it comes to Help to Buy, obviously from a legal point of view, we don't really get involved too much in mortgages, in the sense of mortgage products, ability to borrow, affordability in that sense. But from our point of view, as far as Help to Buy is concerned, one of the things, if you speak to any lawyer that has had dealings with Help to Buy or any sales representative for a developer, they are absolute sticklers for the detail Help to Buy. So when you're obviously lodging your application with them, which Jason will do or some other financial advisor will do, or in the absence of that, you have to do yourself. It's a lot of responsibility on you to get it absolutely right. Because once these documents are produced, and Help to Buy have fixed timescales. So for example, once you apply to Help to Buy, they get their authority to proceed, essentially detailing the terms of the finance that they're going to give you, the equity loan they're going to give you. Things like typing errors in postal addresses can really delay a transaction as it progresses. So it's really important to know someone that knows how to deal with Help to Buy in particular, knows how to address the concerns they have, knows how to put the information to them in such a way that they accept it, it's produced in the right format, and that benefits everyone in the long term when it comes to the point of the transaction where people are looking to commit and you're looking to buy your home.
I just also wonder, Lisa, whether the perception is there that when you're dealing with a new build broker, whether that comes at a cost to them. And as new build brokers, you know, generally, I can't speak to all them all out there, but in a general rule of thumb, there is no broker fee. You know, we're there to help them through that process, which is why we're in the new build sector. You know, they can often go to an estate agent on the high street and be spending £500, £600, £700 sometimes for advice down there. But we're here free of charge to make sure the client has the correct calculations for their Help to Buy, to make sure it works for the property, to make sure the right income's being used. You know, and as Daniel said there, it is so frustrating when you pick up a case that has fallen apart from someone else and you find that actually, you know, they've missed out a middle name, or even as far as to say on the Help to Buy paperwork, if you miss out the address for the bank, it will be returned to you. And they're sticklers for time, as Daniel said, 4 days at every stage. So what you're doing then is you're eating away into your exchange turnaround time by just basic tiny errors that can be quashed and take the pressure off you from the beginning.
So I think we've covered the benefits then there of why you should have a broker and why it is worth having that conversation early on. How does somebody go about finding a broker for the first time?
Well, generally, if it's at a new build site, you know, there will be a recommended panel of brokers there for a client to choose from. They generally, if you're going in a new build world, if you're looking at that sort of thing, you know, there will be an option there for you to use, and they will know all about the process when it comes to buying a new build and the strict timelines. The FCA register has a list of all brokers. Unbiased.co.uk will also have a list of mortgage brokers on there. I believe even Martin Lewis a couple of weeks ago on his weekly programme suggested that please speak to an independent mortgage advisor who will be able to give you the best advice, because they have access to the whole of market and not just tied to one product or one range of products from one provider.
Brilliant, thank you. So you guys, you have been talking about Help to Buy actually, and I think that's an interesting topic, and it's something I'm going to go back to. So Danny, maybe you can give us a quick overview for people who don't know what Help to Buy is, to explain, you know, what the scheme is and how it can help people.
Sure. So Help to Buy is exclusively on new build properties only at the moment. So that's probably the first point to clarify. Basically, they can be a first-time buyer, or you can be a second stepper or a third stepper. There's no criteria available on that at the moment, but it will be changing in the next release of funds, which will be happening at the end of March, start of April. Currently, the criteria is you need to be buying a property that's 6 months off plan, up to £600,000, and you need to put down a 5% deposit yourself. They're the main elements of the criteria. And the way Help to Buy works is it gives you 20% interest-free loan for 5 years of the purchase price of your property. So if you're buying 600,000, you would get £100,000 interest-free loan, which means that you would be paying £500,000 of the residual amount. You would have to put 5% deposit down of that 600,000. So quick maths, 30,000 down yourself. So therefore you're securing a mortgage of £470,000. And it's a great enabler. It's been a fantastic scheme. A lot of people have taken advantage of it. The way it's changing from next year, though, it will move to first-time buyers only. And also they will be regionalising the cap value on it. So Central London will be £600,000, and then each individual area or region themselves will be given a ceiling maximum purchase price. So for my developments at Green Park and Heartland, that capital value is going to be around the £430,000, £440,000 mark. We're just waiting for that to be confirmed.
Okay. Jason, is the mortgage process the same for people looking to use Help to Buy? I know, Daniel, as well, you touched on this, and it sounds like the process is maybe a little bit stricter.
There is a little bit more like that. Obviously there's an extra cog in the wheel because we've got the Help to Buy paperwork to complete as well. So whereas before you'd simply have your deposit, your mortgage, this time you're going to have your deposit, your mortgage, and your Help to Buy to deal with. The providers that are offering the Help to Buy mortgages are all the high street ones, are quite a few non-high street lenders there as well. So there is a great choice out there. They do have a range of products available for Help to Buy with each provider as well. And again, they're extremely competitive rates, very similar to what I was explaining earlier.
Okay, so our brokers helping us find the right product now to suit our circumstances. We know we've got a whole of market view. That's great. We're looking at our options. So Daniel, how does a solicitor come into this? At what point and when should I, or how do I go about finding one?
Yeah, so similar to what Jason said, so you've obviously found, or you've been looking at your new home, a lot of excitement that comes with that. You've had your chat with your financial advisor to see whether that's a viable purchase, if not, what your options are. You're looking to reserve a plot. Our firm, EJ Winter & Son, recommended by a number of developers to act for purchases. And it's commonplace, the majority of developers, that they have a panel of solicitors from, say, 1, 2 to 3. So when you reserve your plot, you'll be given details of a recommended panel of solicitors to contact, really, to obviously initiate the legal process. There is, or has been, inevitably commentary online from time to time about saying, steer clear of the recommended solicitors, questions about, they act for the developer, they don't act for us, things like that. Actually, I can only speak from my own personal experience. It's definitely not the case. I know people will be saying at home, well, if you don't say that, Dan, there's going to be a problem for you in your business. But 100%. We act for clients. I think one thing to make clear to anyone looking to buy into new build, obviously there's an excitement that comes with it. Legal side, not so much. There's a lot of work from a legal point of view involved in actually checking the title documents, checking the planning documents, all the kind of behind the scenes work, making sure it's all okay for you to proceed, buy the home that you're looking to buy. With that, it is true to say that not every firm is able to undertake that work. Now, we're recommended because of our experience in that sector. Our team only deal with new build transactions, and that's it. The work involved when you get a site pack in is about 6 to 8 hours on average, digesting all the information that comes in, planning documents, planning agreements, things like that. So when you're given a list, a panel of recommended solicitors, it's always worth having a conversation just to see what your feel is, what the rapport is. Do you get on? I think generally people have a perception of solicitors that we're all kind of middle-aged men in suits and quite stern and standoffish. Obviously our firm isn't like that. We're quite approachable, we're quite personable. We enjoy new build. We understand that it is quite a journey, which is different to residential conveyancing generally, where you're moving home or not. You've got different interests all over the place. Our role really is to guide you through this process, which can be complicated. But again, with the experience that we've got being a recommended solicitor, hopefully we can ease that a little bit. But You've got a panel solicitor, obviously, but you've also got access to any solicitor. So you can go online, you can go to your local high street, you speak to solicitors, get a wider range of quotes and see where you want to go from there.
Great, thank you. And
point actually, Daniel, because in terms of the panel solicitors that we have on our sites, the main element is they're very much used to our contracts, and going to an independent solicitor who perhaps doesn't deal with new build or doesn't know the scheme incredibly well, they're basically starting that whole process again, whereas EJ Winters and the other guys on our panel, they already pre-approved the contracts, they know and have already raised the questions, they've been satisfied by those answers, and therefore they're very much going to expedite it a lot quicker because they've already got that background knowledge of the scheme, and just gives them a head start against an independent solicitor. But like Daniel said, the options are endless to you, and you can go to anyone you wish to use, and you can spend as much money as you want or as little as you want. But from a perspective of buying new build, the panel solicitor is always going to be the preferred route for everyone's perspective.
Can you talk us a little bit, Daniel, through the home buying process from a legal perspective? So from the moment of reservation, really, right through to completion.
That's fine. I mean, I'll try and water it down as best I can, because I want people going to sleep while they're supposed to be watching it. I'll try and jazz it up a little bit if I can. So you've reserved your property. Obviously, you've got your panel solicitor. Let's say you choose EJ Winter & Son. You'd normally call in, speak to a member of the team. We would then issue you with a personalised quote. So we have a fixed fee, standardised for the sites that we're recommended on. I can guarantee it's going to be a lot lower than what you expect from a high street firm like us, because of our experience with what we've done already on the sites. That quote will have simple steps of how you need to instruct us. So a few forms to fill in, a payment on account to make, essentially giving us details of who you are, how we get hold of you, what you're doing, so we can get a file open. We can then make contact with the developer's own set of solicitors who are separate and independent from us. And we can say, we're acting for Mr. and Mrs. Smith, they're buying this plot. That kind of kickstarts the legal process from there. Obviously, in the background, you'll be speaking to someone like Jason, organising your finance, but the legal process starts when you've instructed us, we've contacted the developer's solicitors. And what they will then do is they will issue us with the plot contract paperwork. Now, I touched on it a minute ago about the size of this documentation, and as Danny's just said, is that all the work that we've done in this site is normally done before we've even had the first instruction. So the way it works from a legal perspective, obviously, if you have the one plot, the work involved is very similar to if you have 10 plots, which is one of the reasons why we can be so competitive on our quotes. Is because the time and the work involved in each individual transaction isn't any different than doing just the one. So we can kind of spread it out and reduce it. So we know the contract, we know the title. Our job then is just to make sure that there is no intricacies, variances, double checking the paperwork that we've seen already, that we've asked questions on already. And when we have that plot contract paperwork, we then report back to our client and we produce, as best we can, our own report. So 6 to 8 hours worth of work for someone that's qualified to look through these things and has experience of it, as opposed to your home buyer who's never seen anything like this before, but just wants their house. There's a lot to digest, an awful lot to digest. But our role really is to try and make it as easy as possible and try and break it down into kind of bite-sized chunks. And we'll produce a report, say 8 to 10 pages long, and we'll kind of go through each section of what it is that you're buying, from the contract, plans, the lease if it's a flat, or the transfer if it's a house. And at the end of that report, we'll give you a things to do. So a bullet list. This is what you sign. This is where you sign it. You return it. This is what you pay. And you kind of work your way through that in order to kind of organise ourselves, hopefully with a view to exchanging contracts shortly thereafter. So you've got the report. You've got all the paperwork. Once we've had that, I should say this at the start, right, but when we've had the paperwork in from the developer solicitors, again, we're able to get the paperwork out to clients within 24 hours. So we've received it. That's when the 21-day or your 28-day reservation period starts, normally. And so we've given the paperwork out to clients within 24 hours. So all of a sudden you are, as Danny said, ahead of the game. you've got the paperwork early. You've got as much time as you need really to go through it. Inevitably, there will be questions. We expect it. We're readily contactable by email, by phone. We can talk through questions. We can clarify phrases. We can, basically help you understand the intricacies of what it is that you're buying in this development. In the meantime, the mortgage will be sorted. So you'll be signing and returning your documents to us. You'll pay your deposit to us. That's in the things to do section as well. And by the time the mortgage offer comes through, if we have all those documents in and a deposit available, we'll be looking to exchange contracts. It can be as simple as that. That's how we try and break down the process. So it's really, there's no, like in residential conveyancing, there's a lot of little stops along the way. New buildings are different. We get the paperwork in, we've already digested it, we pass it over to you and explain it all, give you opportunity to ask your questions, and we tell you exactly what you need to be doing in return so we can get ready to exchange. Exchange of contracts is the point in a transaction that becomes legally binding. So when you reserve a plot, obviously you're given a window reservation period, a window of opportunity really to undertake your checks, make sure you're happy with it, discuss with your solicitor, organise your finances and get ready to commit. At the end of that period, or before it, if we're obviously kind of quicker than that, you exchange contracts. And that really means you're legally committed to purchase the property. That's different then to completion, which follows after. So at the point of exchange, you're committed. At the point of completion is when you actually take ownership of your home. Now with new build, that can go one of two ways. Obviously, if the property is built and ready, when we're at the point of exchange of contracts, we'll be talking about a specific date that you'd like to complete, that works for you, that works for the developer. That will become binding on exchange. So you will know exactly when it is that you're going to be buying. Your property is built and ready. You're keen to get in. Obviously, the developer's keen to sell as well. Most cases with new build, the property will be exchanging on notice, which means the property isn't yet ready. It's under construction. We'll have a window of when it's anticipated that it'll be ready. So you'll be committing to the purchase on the basis that when the property is ready, we'll be given a solid 10 to 12 working days notice that it's ready for us to then touch base with you, organise between us when the completion is going to take place, and kind of work out the final processes from there.
Right.
Just to add, because it's very daunting in terms of when buying off plan, especially when it's 6-12 months and thinking I've only got a 12-day window to organise my removals and get out my current property. The way Berkeley work is we have a customer relations manager. So once you've exchanged contracts, you're handed over to that customer relations manager. She will update you on the build program. She will talk you through the layout of the properties if you want to make any changes. But more importantly, she'll let you know, okay, we're 6 months away. We should be applying for your mortgage now. We need to get that in play. Now we're 2 months away. We now need to start looking at booking your removals. So they very much give you a transparent view of when that house is going to be delivered. And look, the window is very much a window because we're building off plan. We don't know when they're going to be complete. We have a build program, but we're relying on the weather and all these things that can affect us. So we need to be able to have that flexibility on the completion date. But we realise it's incredibly important to notify customers as that is coming to completion.
Right, so you have that proactive help. You have someone prompting you rather than it being on you to sort of work out when these things need to happen. Bit of both.
Yes.
Okay. One question here actually that somebody's asked us that might fit here. Danny, it might be one for you. Somebody said if a new build isn't ready until, so the example they've given is Q2, Q3 in 2021. When is the earliest time you can reserve a property?
You can reserve a property as far off as 3-4 years off plan. It's completely down to when the developers release that plot for you to be able to reserve it. So if the developers released it already and it's available to reserve, you can reserve it then. What you won't be able to do is secure your mortgage. You'll be able to get a mortgage agreement in principle and have an idea of your affordability, but most mortgage offers only last a 6-month window. So you'll be able to get an idea from Jason and his team, and they'll be able to give you an affordability and repayment schedule, but you won't be able to lock in those rates until we're a lot closer to completion.
Okay, great. So moving on then, we've all seen the papers. People are probably wondering whether now is a sensible time to perhaps be buying a home. I asked everybody here, has the current situation around the pandemic affected or impacted your views on home buying? And again, we're almost even. So 47% of people have said actually it's spurred them on to buy rather than the opposite, rather than it causing any caution. Danny, how does that reflect what you're seeing at your developments and in buyer trends?
I mean, the market as a whole has been fairly buoyant since the lockdown's been lifted. A lot of people have been pent up, not being able to look. So there's that build up of people wanting to move and having legitimate reasons to move before the lockdown, but haven't been able to do that. Secondly, there's been a lot of people who have been stuck at home for a long period of time, and now they want to move because they've realised their house isn't suitable for how they live and their lifestyle. They want more space, they want outside space. So there's a variety of different reasons for why people want to move at the moment. As you touched on earlier, though, the stamp duty element has been another added layer of that increase in demand since the lockdown's been lifted. And as a whole, I think the stats are saying that we're 90% up on where we were in March. So we're near on line where we were pre-lockdown. Transactions, 40,000 new transactions have been agreed since lockdown's been lifted. So there's been a massive surge of new sales being agreed. And in turn, the mortgage market started freeing up. There's more rates and more products coming onto the market every day, which in turn gives more confidence. So it's very much like we touched on in the previous webinar. There's a lot of press perception and there's a lot of self-perception of what you feel the market's doing, and they form your opinion of how you feel the market is. But actually, on a day-to-day perspective, running our sites, we're still seeing a high volume of visitors, inquiries, and that's converting through to sales as well.
Right.
I can second that. So from our point of view, just to hark back to when obviously the lockdown was in there. So we typically have, say, 300 to 350 instructions per month for our team, which sounds like quite a lot, but there's about 10 of us. In April, we had something like 47. In May, we had something like 51. In June, we had just over 300. So it seems to be, obviously there was definitely a stop. Not many abortive transactions from our point of view though, but definitely a stop where new inquiries were, as you'd expect, very low. But I think as the lockdown has eased, it seems to be that the confidence is coming back in the market from purchasers. Certainly from what we're seeing, we're getting a lot more instructions, which is more in keeping with what we'd expect to see at this time of year.
Yeah, definitely. I think from the point of view of the conversations we've been having too, the stamp duty clearly helped, but there was definitely an element of people perhaps fed up with where they were living. Perhaps, as Danny said, wasn't offering them what they wanted anymore, and they come to realise that and had the opportunity to actually talk about it as well during that lockdown period, because often it's a case where we think about it for a while, we and ahh about it and talk about it. Well, if we're together or just individuals, it gave them the opportunity to have a bit of time out to think about what I'd like to do in the future. And that certainly spurred people on. And some of the conversations since obviously the change in stamp duty rules last week, you know, the conversation we've had with people, actually, we were thinking about it, but this has made us go forward and buy. And, you know, saving up to £15,000 on a purchase is just a magnificent saving. So why would you not choose now to buy?
It's very...
Go on.
But through the whole of lockdown, we were one of the only companies to continue marketing. We didn't furlough any of our staff. We continued the build side on all our developments. Obviously, restricted movements and not being able to have a full allocation of contractors on site. But we still managed to sell, I'd say, one sale per development, so 4 a week, which during a massive global pandemic is amazing. And that's only just starting to increase now in terms of the conversion rates from inquiries to customers. So It was okay during the pandemic. It wasn't Armageddon as some of the press had reported. It wasn't the worst thing that had ever happened. It allowed us to recalibrate to a certain degree. And from buying from a St Edward perspective, the fact that we've continued to build during that close down means that our completion dates are still on target, which means we actually are going to have stock completing before the Help to Buy window changes in March, which also ties in with the stamp duty holiday ending. So we're in quite a unique position and a position of, we feel, strength, that we've got a lot of variety of product across the group to be able to offer our customers.
And you mentioned earlier as well, low interest rates at the moment are about as low as they've ever been, aren't they? So that's another benefit to buyers.
Yeah, absolutely. You know, interest rates, so the Bank of England base rate has an impact on some rates. People with trackers and people with discounted rates certainly be seeing the benefit on that. Fixed rates are in another sort of way of being funded. But what actually you're finding, the reason why these fixed rates are starting to come down is people like Halifax had real issues lending during the lockdown because their surveyors couldn't go out. They didn't have a system where e-surveys were being done, and so therefore their sort of whole workforce was based on helping people, quite rightly so, get their payment holidays. For the biggest new build lender in the UK to pretty much grind to a halt for a couple of months has taken a massive hit on their market share. Bank of Ireland and Nationwide were two that were doing these desktop valuations throughout that whole period. They certainly made up a lot of ground. The Lloyds Banking Group now are cutting rates week by week by week, it seems, at the moment, because they'll be aggressive with trying to get their market share back for the end of the year. You know, surveys are now available through obviously physical, and they are doing some e-surveys as well. But the marketplace had 60,000 to catch up on. And they're doing a great job in trying to catch up now. We can see the effects of that. But what will happen is their push to be still the number one will result in their aggressive reduction of rates, both on Help to Buy and normal, which will only be even better for the consumer.
Mm-hmm. So in your view, lending, it's definitely, things are opening up. The range of deals is opening up, and things are starting to move again on that front.
Absolutely right. I think anyone would say that borrowing money at 1.5%, 1.6% is going to be a lot more preferable to borrowing it at sort of 2.8%, 3%, 3.5%, where rates were. And indeed, 5+ years ago, I think if you're seeing rates below 5%, you were saying, actually, that's a cracking deal. And here we are looking at rates of, I saw one the other day at 1.16% with big deposits, fixed for 2 years and 5 years. Today, Help to Lady at 1.59%, fixed for 5 years. That's incredibly cheap money to borrow, at, and that's only going to help people's budgets. And why wait till it's going to cost you more? Now's a great time to take advantage.
Great. One of the questions we've had come in during the session, somebody has said they're 79 years old and they're too old to get a mortgage. And he said, I'm looking at financing via an equity mortgage. What difficulties might he need to overcome in order to do that?
To be fair, that marketplace, as all the telly ads and all the radio ads, will tell you, Evolve, as new build specialist, also has a specialist side to deal with lifetime mortgages, which is effectively what this is. We are coming across this more and more in two ways, really. We're coming across it where grandparents and parents are looking to release monies from their property to help their children buy a property, and that's helping them get onto the ladder now. Certainly in this situation, gentleman, lady is 79 years old looking to buy. Equity release mortgages have modernised so much over the years. We used to be looking at scary rates, 6%, 7%, 8%. And I'm just helping a gentleman through a remortgage on one where he's fixed for life at 6.99 from 8-9 years ago. We're now looking at 2.64%. fixed for the rest of his life on a property. So you can imagine the difference that's making. In this situation, there is loads of options available, very straightforward options available, because an equity release mortgage isn't just about taking money out of a property to help you spend on nice things in life when you think, actually, now I want to do that. Equity release can actually open the door to our more senior clients buying a property in a location in an area where they would like to buy from, which would also perhaps give them better access to relatives, to family, to communities, and to amenities as well. And certainly raising a lifetime mortgage at 2.64%, where you can actually, if you've got a good enough pension, also pay some money towards, so you're not having that equity or the interest build up so quickly. You can pay towards them as well. But it would certainly bridge the gap between what equity you've got and what the purchase price actually is as well. Really reasonable rates.
Great, thank you. And a couple of questions as well on Help to Buy, Danny, that you might be able to help with. So someone is just clarifying, will the government loan that you take with Help to Buy, that comes off the mortgage amount that you then need to borrow?
Yeah, so basically the government lends you 20%. So if you're buying at 600,000, it's £120,000 interest-free loan, which means that the rest of it, the residual amount, the 480,000, would need to be made up by yourself out of 5% out of your own deposit, and the rest made up a mortgage. So you would have to lay down £30,000 yourself. So that's £150,000 deposit, and the rest then is mortgage, which is £450,000. Then when you come to sell that property, two things would have happened. You would have either paid that Help to Buy amount off, and therefore the full property is your own property and you take the full equity out of it. Alternatively, if you haven't if you haven't repaid the full amount, you would pay the residual amount of what you owe. So if you pay back 60 of the £120,000, when you come to sell the property, if the property is still valued at the same price as what you bought it at, you would pay back the £60,000. If it's gone up in price, you would pay the 10% on the new sales price. And if it's gone down, you pay 10% on the revised lower sales price. So the Help to Buy is not there to make a profit. It's there to help and enable people to get on the ladder.
Okay. And someone else has said, if I've got a deposit higher than the 5%, am I able to put that up? Does it have to be 5% on the nose?
Please cover that, Danny.
5% is the minimum, but Jason, you're better to.
Yeah, you can put in more than the 5% deposit. With Help to Buy, they do have parameters, and the parameters are that you must have at least 25% of the value of the property as a mortgage. That's the sort of minimum level. So you can put in a lot of deposit. The other parameters are all about your income and about what other finance you might have outstanding, because there is two separate parameters there with regards to debt to income. So where we work out how much you're spending compared to your net income coming in. And there's also a fact there about you can only borrow 4.5 times your income as well. So 5% deposit is the absolute minimum. Depending on your income, depending on your outcomes, you might actually need to put in more if it's available, or some clients would like to put in more. Also a good point on there with regards to Help to Buy is that you don't actually have to borrow the full 20% from the government, or 40% in some locations in London. You can borrow lower percentages as well. And some people like to do that. If they've got a high deposit, they can just top that up with a percentage, which can be broken down into even quite small chunks at the moment. And equally, when you come, as Danny said, to pay back the Help to Buy, you pay back 20% of the value of the property at that point, higher or lower. And really you only owe them the amount that you've borrowed, but actually if it's grown, which is a great benefit to you, all you're doing is splitting out some of the profit back to the government for helping you out with this scheme in the first place, and obviously the rest comes back to yourself. So it's, yeah, a great scheme for all, really.
Great. Thank you. We're at time, so let's wrap up. Thanks everybody for joining us today. I hope you found it informative and practical. We've still got questions here that I'm afraid we haven't been able to get through. But if you do have any more questions or you'd like to speak to the team anymore, Evolve are going to have a colleague at Green Park Village in Reading at the Marketing Sales Suite on Saturday. So she'll be there to take your questions. You can pop in and see her, or you can call the Marketing and Sales Suite at Green Park Village and have no obligation chat with her, and she'll be able to give you a bit more information from that perspective. You can book an appointment to do that on the Green Park Village website or the Heartland Village website. So that's heartlandvillage.co.uk or greenparkvillage.co.uk. Jason, if people are unable to get down on Saturday or they don't have time to make an appointment, how can they find more advice from the Evolve team?
Yeah, it's quite easy. We have a mainline number. Our website is evolvefs.com. We have the ability there for live chats. We have the ability to select a time that you'd like a call, or you can call to action straight away and press the link and call straight through to us. We've got a team there ready and waiting to take any inquiries between 8:30 and 7 p.m. Monday to Friday, and 9 till 6 p.m. on a Saturday, 10 till 6 on a Sunday. So we're always available for calls.
Great. And Daniel, where can people find out a little bit more about EJ Winter and get in touch with you with any questions?
Yep, sadly we won't be at the sites this weekend, but our details are online as well. So it's www.ejwinter.co.uk. We are based in the Reading Town Centre. Usually, say 4 months prior to this conversation, I'd be saying, come on down, arrange to see the team and have a 10-minute chat. Obviously, we're not offering that at the moment for obvious reasons, but again, the phone lines are readily available. Feel free to give us a call. If it's just to understand the process or any specific questions you have on new build or conveyancing generally, the team will be happy to help.
That's great. And Danny, how can people find out more about St Edward?
So the easiest way is via the Berkeley website, which is www.berkeleygroup.co.uk. Alternatively, as you've just given out the Heartland Village and the Green Park Village websites, you can go direct onto those schemes. Finally, all of our sites are open 7 days a week, from 10 a.m. till 6 p.m. every day. So if you do have any questions, you can either give them a call, drop them an email, or venture down to site, and I'm sure one of the team will be able to help you.
That's great. Thanks everyone again for joining us. I hope you found it useful. You may well get a feedback email from Zoom, so please do let us know how you found it, and we hope to see you at another webinar in future. Thanks very much, everyone.
Thank you, everybody.
Thank you.
Bye.